Latest USDA crop progress report has a lower estimate for corn production, and as you might expect, it's impacting prices at the farm gate. But are outside markets to blame as well? To find out more, we join This Week in Louisiana Agriculture's Neil Melancon with this week's in-studio guest. Neil?
Thanks, Mike. Tuesday saw the release of the USDA report for supply and demand. And joining me now is David Bollich, a grain marketing specialist with the Louisiana Farm Bureau Marketing Association. And Dave, first up, kind of give us a recap. It seemed like this report didn't shake up the markets too much, did it?
Well, it didn't. It was largely, I think, expected. We were looking for maybe increases. I think the only surprise there was that corn did not increase as much as expected. It was actually maybe a couple of bushels under, I think, what many were fearing there. So that was why we saw the good reaction in corn prices afterwards. Soybeans, on the other hand, we saw a fairly hefty increase. And the bottom line, which is the carryout, 40 million bushel increase, that puts the projected carryout, fairly comfortable for the market. And I think we expected to see a pretty good sell-off, but we haven't seen that so far.
One of the things that kind of caught my attention is last month we had the October report that came out. It affected the market maybe that day and throughout the day, but it was quickly dismissed after that. The same thing seems to be happening with the November report. I guess last month was weather related, being that it was still raining in the Midwest. What's the deal with the November?
Anything we see on the report that just came out is still not 100% certain. So we've got a lot of harvest, especially in the corn, to go through, and you could easily add a couple of bushels or pull it away. Aside from that, though, I think you've got all the outside markets that are related to the world economy, and maybe the biggie out there is the U.S. dollar. It's been falling back. We'd come all the way back down to our lows, by midweek, and then we made new lows late in the week. So the dollar it's a big factor because it's how everything is priced. And when you see a weak dollar, generally that's good for commodity prices. So a lot of outside market factors, that are playing into with the supply and demand picture as well.
The dollar, of course, makes our exports look a lot more attractive to other countries. Speaking of other countries, let's talk a little bit about South America. I know their crop is still a ways away. It looks a lot better than last year for them. What's the price forecast between now and when that crop comes in the spring for them in South America? And what is their crop prospect like?
Well, I think the only thing we know right now is that they intend to plant as many soybeans as possible. Given the current prices, and the input costs there, they can make some money right now. If you look at what are we expecting to see, that depends on their growing season. We're through with ours, and you could tweak it a little bit, a bushel here and there and everything, but we know that we have a good crop here in the U.S.
All right, David Bollich.